how our current shifting real estate market is going to impact you? Stay tuned. Hey everybody, Tim Weigel here with Watson Realty. I'm going to give you a nice little market update over May from last year compared to this year, as well as be able to review how our current shifting market, and yes, the real estate market is shifting, so there's going to be a lot of changes the rest of the year, will possibly impact you. Now, before we get started with everything, please subscribe to my YouTube channel, leave a comment with any questions that you might have. I look forward to being able to answer them for you. And if I don't know the answer, I can definitely find the answer for you. So now let me share my screen and we'll jump right into the fun stuff. So, and this is for the month of May. And what we're going to be doing is we're going to look over the market data, May 2021 versus 2022. And we're going to see some changes in there. And then we'll talk about what I see happening to this market and what we're feeling in this market. And trust me, we are feeling stuff. So first off, taking a look at Orange County. Orange County decreased in homes sold 16% year over year, but their median sales price went up about 19%. Days on market stayed about the same. So price is going up, inventory is going down. Now, when you look at the cities within Orange County and break down them a little bit, we got some interesting stuff on here. We got Ocoee with a 25% increase. Maitland was up 31% year over year for the month. Orlando was up 18%. Winter Park had a little bit of a decrease there. But then when you go to the sold side, for the most part, every city that we kind of focus on is all negative. And it just is following the pattern of, we thought inventory was low last year. You ain't seen nothing yet. Now moving into Seminole County, we see also a decrease by about 20%, but median increase 20% as well. So supply is going down, price is going up. It shows the type of demand that we have in this market. And they're taking about 6 days in the market is their median days on market. Now, looking at the different cities that we kind of focus on, Casselberry had a nice healthy jump of about 20%, and they actually had positive growth by literally one sale. But for the most part, we saw negatives in most cities going forward, but we also saw across the board positive growth. So, I mean, our lowest positive growth was in Winter Springs at 8.64%, but it's still healthy growth year over year. You're not going to find that in your bank account. Heck, you ain't going to find that on the supermarket shelf with the way inflation's going. Now, moving on to Osceola County, we saw a decrease there of about 6%, but we saw value increase of the homes by about 24%. And then days on market was cut down by about 50%. So moving on to Osceola County. So with Osceola County, we have Kissimmee jumping up 25% with their growth, 20% in St. Cloud, actually positive solds in St. Cloud, but negative in Kissimmee. Now let's take a look at Lake County. Lake County actually had positive amount of solds, more people buying out there, so it's increasing the sold homes, and the median sales price is up 25%. So not too bad. Now taking a look at some of these cities in there, across the board in Claremont, Mount Dora, Mineola, Groveland, Sorrento, we're seeing positive growth. Most of them in the 20% range. Mineola is a little lower at 17%, but it's still 17%. And then you move over to the solds, you got Claremont have positive inventory. Mineola had some positive inventory. Groveland had positive inventory. Sorrento was cut down a lot, and Mount Dora was about even. So now Volusia County. For Volusia, we had positive growth when it comes to solds at almost 10%. And we're almost at 20% for median sales price increase. Now, if we look at some of the cities we follow in there, Deltona, DeLand, Barry, and trust me, there's a lot more options out there, but these are the ones that we primarily focus on for Central Florida for us. Solds, all up. Growth for the median sales price, all up. So basically, if you owned a home last year this time, congratulations, you made some great money on that one. Now, here's some of my takeaways as we go through some of this data. And again, please leave comments. I'd be interested to get your take on it as well. I'm not a magician. I don't have a magic crystal ball to tell me what's going on. I just look at the data and see where it's heading. And from being in the market, feeling the market, playing in the market, talking to people, this is what we're seeing. So as we travel throughout May, we are seeing a shift in the market, and definitely we are feeling that shift caused by a lot of uncertainty right now with our economy. Inflation keeps going up. Interest rates are on the rise. Now, granted, they did level off a little bit in May, but they rose pretty fast. From January, the gas prices, I mean, for Florida, I don't think I've ever seen us hit almost $5, and right now we're at $4.75 as of today. So this is interesting stuff on here, but it caused a lot of uncertainty in the market. So that uncertainty in the market makes it where people are a little more hesitant to go out. So it doesn't mean that homes aren't going to sell, because people still have to buy and people still have to sell. So it's still going to happen, but the rate's going to start slowing down. So we are driven by super low supply. And May has definitely shown a reduction year over year with supply. Numbers today prove that. So this is interesting because for the year 2022, for my weekly updates that I've been doing, the month of May has actually had more inventory released than the previous 4 months. So we're still super low for the year, but we're definitely lower year over year too. So what I am predicting from the feel of this market is we're going to start to see the shift, which we're already feeling it for the summer months, which are supposed to be the hot and busy months. We're going to start seeing it level off. Now, I'm not going to say we're going to have a crash, because we're not. Okay, something out of the blue would have to happen for that to happen. But we are going to see the homes level off slightly. And you see the interest rate that we're seeing right now, or growth, median sales price 15, 20, 30%. We're probably going to start seeing it level off to about 4, 5, 6%. So, and that's going to be our new normal market going forward for a little bit. So, and I expect we'll really start seeing it probably in the fourth quarter. So if you have questions or things that you feel are going to happen, I'd love to hear from you on there. And here's several ways that you can connect with me. So, and I hope that you got some good, useful information today. And if not, let me know what you'd like to see in the future. Out of that, see you all later.